Hey everybody, welcome to the morning market briefing. It's Wednesday, June 17th, 2026. Quick programming note, no call on Friday. Just market holiday. I feel like we maybe let that scheduling note go by, but no call on Friday, so just so you're aware. So this is our next last call of the week. Lots to get to. We've got some data coming through economically with retail sales. We've got a Fed meeting to discuss, and I guess maybe a little more clarity on the deal with Iran and some of the fallout tied there too. But let's jump in, Ben. Let's look at retail sales. We're
having them come in right now. It looks like it's coming in pretty strong actually for the month of May. April was revised down slightly, but May came in at plus 0.9 on a month-over-month seasonally adjusted basis, and the estimate was a plus 0.6. So that is good news. I'm looking for the X auto and X gas number here. And if I look at that, that was 0.5, it was 5.6. Okay. So I don't know where that's coming from. That seems a little off. Oh, sorry, 0.5. It was 0.5. And the estimate for that was 0.3. So that was good as well. And there was no revision on that. So I think overall, this is a good monthly retail sales report. If I'm looking at the internals, gasoline stations were still very strong, up 3% on a month-to-month basis, up over 26% on a year-over-year basis. Of course, a lot of that's just inflation. And then in terms of sequential acceleration, we're not really seeing a ton. We did see a little bit of an improvement in general merchandise, but that's still hovering right around 3% on a year over year. The biggest move was in non-store retailers, so this is good for things like Amazon. And there was a little bit of an improvement in furniture and home furnishing stores. So it was a good report, fairly balanced overall. Nothing really crazy in it, but it just shows that people continue to spend in May despite all of the headlines going on in the world.
which I think just continues to underline the belief that the consumer, at least on the average, is in a relatively stable position. We may be seeing things like savings rates dwindle. On the fringes, we may be seeing things like credit card delinquencies ticking up. We may continue to have frustrations about housing prices and interest rates. We may continue to have concerns about gas prices, although those are abating quite a bit over the last few days. But people are active. And I think especially as you think of, I think clients often fall back on their last financial trauma. And for many here, maybe it was 2022, maybe it was 2020, maybe it was 08, where you think of just, these real pain points. People don't seem to be recalling those gloom and doom scenarios. People are out there, they're spending money. It's relatively well-rounded. The spikes are where you think the spikes should be, and everything else is kind of in line with expectation, but slightly better. So good stuff there. We had a very strong bond auction yesterday, Ben.
Yeah, bid to cover was 2.75, and this is on the much maligned 20-year bond, which was only started. Tom would know this better than I. So I think it was about 8 years ago where the 20-year bond was first issued, but very strong. Almost 3 bids chasing every dollar at auction, almost as strong as a SpaceX IPO.
It's crazy. They got 4. Got 4.
Dealers were left with just 10% of the auction. Indirects were very strong. I think about 80% of the deal. 72%, and then directs were about 19%. Indirects, of course, represent international buyers, and so people, even domestically, but also internationally, really looking at U.S. debt.
Notably, UK inflation came in a little bit cooler than expected. Came in at 2.8. People were looking for 3. Does that? I know Tom shared a note. I think it was Tom in the investment committee about rate cuts over there. Does this change anything for the UK?
I think that they might not cut rates, but I think people might be alluding to it. What I would say, I think, with all of this is that I think Japan, the UK, Europe, and the United States are all in a very good position on inflation right now. Inflation is coming down, and they have the market in a stance where the market thinks that they're going to tighten policy, whether that means not cutting rates like here in the United States, or whether that means hiking rates like in Europe or in Japan. They've convinced the market of this, which put these central banks in a very good position, because it means if they do cut rates, they can really have a stimulative impact on the economy. And I think they like where they are right now. And it's a delicate balance, because on one hand, they could seem very stupid because they're keeping rates elevated at the time where people are saying you should be cutting rates, or at least talking about cutting rates. But on the other hand, as soon as they talk about cutting rates, then they actually have to follow through on it. So they have to make the market believe
that they're not
doing. And this kind of gets to Kevin Warsh's whole thing. He's like, we just got to stop talking.
Yep.
Let's just stop talking and do the job, and not just shoot ourselves in the foot, because the more we talk, the worse it becomes. And so I think they've talked themselves into a good position right now. Now would be a time to stop talking. It's like, quit while you're ahead.
Yeah. Yeah, and I think that's interesting. I mean, we've talked about it ad nauseum on the call, but, when you think about the U.S. interest rate environment, the longer end of the curve is really not set by the Fed. It's set by market forces and demand and risk profiles and economic conditions, all those things, but it's really set by participants. And the reality is, probably predating COVID, though COVID was probably in 2022, coming out of COVID is probably when it became most obvious. The reality is we've had market reactions, months before interest rate action is actually taken by the Fed, because it's been so telegraphed. And the reality is I think that was happening for probably the decade prior to that window, but there just wasn't much rate movement, so there was not much to telegraph. But that puts you, I would argue in a lot of cases, it puts you in a no-win situation, because all you can do is either what's completely expected and already priced in. So you take what may very well be rational action, but it doesn't really benefit anybody in real time when you actually take the action, or you can surprise people, and nobody wants that. So something to be mindful of. We do have a Fed meeting today. What are you listening for, looking at, wanting to know?
I think if I was putting a betting market on the Fed meeting and specifically the press conference afterward, I would be very curious what the over-under would be set at for the length of the meeting. Because I think in some respects you could say that Kevin Warsh is going to get up there and hold it to 30 minutes and be in and out and try to not say a whole lot, because that's what he ultimately wants to do. On the other hand, maybe as this is the first meeting, he thinks that this is his time to be able to explain to people how the Fed is going to work differently from now on. And so maybe it's over an hour, which is typically the length of the press conference.
It's kind of, do you tell them what this is going to be like, or do you just show them?
Right. And I think that he likes to talk. He doesn't think the Fed should do that much talking, but he does like to talk. And I think that I would definitely take the over on it. I think that he's definitely going to try to win over the press, and I think he's going to be fairly successful at that. The question is going to be, how hawkish is he going to be? I think he's going to dance around that a little bit. I don't know how exactly he's going to dance around that. Maybe he'll split it into like the short term and the longer term, because I know he does think that AI is deflationary. I would be curious to see what his thoughts are on the impact of interest rates on the overall inflationary picture, because you have some Keynesians saying, yes, interest rates are controlling everything with inflation, and then you have some kind of the Austrian school saying the exact opposite. Like, look, interest rates, you're pushing on a string right now in terms of inflation. You've already killed the housing market. Home prices in Seattle are down 2.5%. We saw that news this morning. So I'm curious about that. And then also, I think just the behind the scenes dynamics, I'm curious about how does it look with Kevin Warsh, who's now chairman of the Fed, but Jay Powell is still on the board. Mm-hmm. How do those dynamics work? And I think that it's probably going to be a little bit more congenial than a lot of the media has made it out to be over the past 6 months.
If it's not, we will hear that from Nick Timmerhouse.
Yes.
That would be one prediction I would have. The other prediction, longtime listeners to the call will not be surprised at all by this prediction. And if you're not a longtime listener, make sure you subscribe to the podcast, or if you're on YouTube, like and follow the channel. But my second prediction would be that the cleaning crew will come in right as the press conference starts. So we will have our AirPods in or the TV turned all the way up so that we can hear over seemingly an insurmountable amount of vacuum noise. So that's my other prediction.
And banging. There's a lot of banging.
A lot of banging. You people forget this, and you may need to try this at home. You can't effectively get a trash bag out of a trash can without knocking it over. So if you're like me and you really put the whole family on your back when it's time to take the trash out, and you feel like you're underappreciated, take a page out of the cleaning crew at Narwhal's playbook and just knock everything over so that people will say, "Oh wow, like look at Andrew, he's taking the trash out." So that's just a pro tip. Come for analysis on the Fed, stay for life advice. We got details on the deal. I think there's still a number of people that would say, "Well, this isn't final reporting," but it seems to be corroborated enough, and it seems to be consistently reported enough that I think this is the deal. And I would lead with, I think a number of people are not real pleased with this deal. Going through the points, I think, may be an exercise in futility, given there's even some dispute on those. Trump has offered to read the entire deal word for word. I don't know if you saw that in a press conference. I don't think that would be the political victory that he thinks it is. But what are your takeaways? Is there anything actionable coming from this?
I didn't see a whole lot new, but I think what the UAE said this morning, I think is, so UAE sits right on the cusp, like they're on one side of the Strait of Hormuz, Iran's on the other, and on to the northwest you have the Persian Gulf, and to the southeast you have the Gulf of Oman and the vast expanse of the Indian Ocean. And the UAE has historically, they've had ports on the northwest side as well as the southeast, but ports on the northwest side. And what they're going to do is, they said over the next few years, what we're going to do is totally get everything out of the Strait of Hormuz. If we need to get stuff out of here, we're either going to pipe it across Saudi Arabia into the Red Sea, or we're going to just use our ports, build out our ports in the southeast, where we don't even have to use the Strait of Hormuz. We're going to go straight out through the Gulf of Oman. And I think that this is exactly what happened during COVID. You saw these fragile supply chains. They all had one source in China. China shut down. No one could get anything, paper towels, toilet paper, all of that stuff, masks. And now everyone's diversified their supply chain, and if something like that were to happen again, there'd be a lot more robustness to the system. And this is what Nassim Taleb talks about being anti-fragile. So at the moment where that fragility is exposed and these things happen, you just kind of build. It's like calcifying bone. You break a bone, it comes back stronger.
It's no different than the athlete that misses a crucial free throw and says that's never happening again, and then works to fix the problem.
Yep. And I think that you're going to see all of this, which is ultimately going to render whatever leverage that Iran has over the Strait of Hormuz, not tomorrow or not even next year, but over time, it's going to diminish that leverage.
Simultaneously, though, I wonder in the short term, the fact that you have a neighbor that essentially shares the strait, the fact that they're like, you know what, we're just going to get out of here. If I'm Iran, I'm taking that as a victory.
Yeah.
That no one else wants to challenge us here. And even though we're supposed to be sweeping it of mines, getting everything out of the way, opening it up, we ran somebody off.
Yep.
So perhaps two victors there, one in the short term, one in the long term. Ben, let's talk peptides.
Yeah, so this is a programming note that I'm sure is very, very interesting to a niche group of our listeners, and to many of our listeners, they think, Pep what? But so peptides are kind of this newest class of drugs that have been around for a long time, but have been Schedule II, which means they've been banned by the FDA. But what's happened in April is that these were D-banned, I guess, from Schedule 2, but they weren't put on Schedule 1, which means they were approved. So they're Schedule 1 anymore. Yeah, they're not banned anymore, but they're also not approved. So they're kind of in this gray area. So you can get them kind of legally, but it's also not fully legal.
You got to kind of mix them up yourself.
You can't use a compound pharmacy. And so next week they're going to be ruling on this. They have a committee of experts that's going to determine whether or not these are going to be approved. And all signs point to the fact that they're going to be approved, which is going to unlock a new massive class of aesthetic peptides. And many would argue that it's not just aesthetic, but it's also meaningful, that they provide meaningful health benefits. So stay tuned for that, because this is going to be a trend that I think a lot of pharmaceutical companies are going to be on, and particularly a lot of these other like Hims and all these other companies are going to just be massive on the peptides. And so it's going to be interesting to watch.
You got to figure they're already gearing up for good news on there and have a new market to enter and know, mass market things. I know Tom will have thoughts. He's certainly done more research into this than I have. So we'll get Tomcat back and kind of dive in. Ben, you watching the College World Series?
I'm not.
Man, you got to start. It's been keeping me up way too late. Like back-to-back nights past 11, not my thing. So. But Georgia's still in it. They've got to beat Oklahoma twice.
I will say, this is a quick programming note. I was asked not to talk about soccer, so I won't. But on the Georgia note, that is the only college football team that I am supporting this year, and I am supporting them full with everything. Like I've never been a bigger Georgia Bulldog fan than I am today, and will be this season. I have never disliked Alabama more than I do now.
What's changed?
So first of all, Washington is sold. Washington doesn't know what's anything. I don't like the coach. The quarterback doesn't want to be there. It's a disaster. I mean, it's things need to change. I have an increasing dislike for Kalen DeBoer over at Alabama. All the honeymoon from getting the national championship, that is gone. That is dead. And there are no warm, fuzzy feelings. So Georgia does things right.
Things change when you have a son. You want to make sure that, hey, I'm the biggest influence in this little dude's life, and I want to make sure he doesn't grow up liking sissy programs like Alabama. In Washington.
I'm on board with that.
I'd put those two at the exact same level. All right. I like it. Welcome to Dog Nation. You guys start barking at Hicks after the call. And we'll take it from there. Y'all have a great day. We'll be back tomorrow. Tomorrow is Tomorrow Day. See ya.